Assalamu alaikum friends, welcome to lecture 2 of AAA, and today's topic is money laundering. If you see your past exam, this question on money laundering has not come. It came once in June 2020, but the paper is not there in your ACCA website. If you see, it's not there uploaded, right? It's March and September, December 2020 which is given. So this is a very important topic if money laundering comes. Okay, you have to be prepared always for a topic which does not come. Okay, just because it didn't come in the past does not mean it will never come, because this area is very technical area. You understanding? You cannot just write if you don't know things about money laundering. It's more like rules. You need to know it. You either know it, you either don't know it, but you cannot make up things from yourself and write on money laundering. There are some topics you can make up. For example, SBL. It's topics in SBL you can somehow make up and write things if you have some knowledge about it. Money laundering is very technical area. Okay, you need to know certain things. You need to know certain acts, certain rules, regulations, how things needs to be done if money laundering situation comes. So that's why you need to uh, go through this. Okay, even in your textbook, Kaplan textbook, this is chapter 2. Okay, right after your chapter 1. Chapter 1 is your rules and regulations. Then second is money laundering, because this also comes under rules and regulations only. So here we are going to focus on 4 areas, starting with what is money laundering, what action includes money laundering, all the types we are going to study. Second, what is anti-money laundering program? Anti-money means what? How to combat money laundering. If money laundering situation happens, how do you make sure it does not happen? Third, what are the ethical guidance for on money laundering? So these are the 3 areas. I'm sorry, it's not 4, it's 3 areas we are going to go through. Starting with money laundering. Okay, so these are the 3 areas: the offenses if it happens, the accountant's responsibility in the money laundering, and the ethical guidance. All the 3 parts you need to know. From the exams focus of point, okay, this is a knowledge based. Okay, most of the time you might be asked to explain the elements of an anti-money laundering program. That means how to overcome money laundering program. What are the things you need to do? Okay, you might sometimes be even asked to identify a suspicious transaction in the case study given to you. And in that condition, if you have identified that there's a suspicious transaction, what is the accountant's responsibility in such situations? So from the exam's point of view, this you might be asked. Okay, this is the way a question on money laundering will be asked. So now we are starting with the definition of money laundering. Okay, money laundering is the process by which criminals attempt to conceal the true origin and ownership of the proceed. That means you don't know whose proceed it is. You don't know the origin of that. They will conceal it, because these are generated through illegal means. Money that comes to you through illegal means. Okay, in simple, this is the meaning of money laundering. Okay, so it involves 3 stages. Money laundering involves 3 main stages. First stages, it could be a placement. What is placement? Cash is obtained through criminal activities first placed into the financial system. Whatever the cash you have, it is called as, it is another name for it is black money. You put it in the financial system. Second, you do layering. What is the meaning of it? You pass this illegal cash through complex transactions. Okay, not directly, through various indirect, you take so many routes and then you keep on transferring this. Why do you do this? So that it makes it very difficult for someone to trace where the money comes from, whether it is illegal or not, to differentiate whether it is illegal or legal. That's why you make it pass through the complex transactions. Third is known as integration, where the illegally obtained funds are moved back to the legitimate economy and it is now clean. So you're converting the black money to white money. Okay. Now, what are the offenses of money laundering offenses? This is a very serious crime, by the way. Okay, that's why there's a separate topic for money laundering. Otherwise, we would have not been studying this. This is not a small offense. This is a very serious offense. If you acquire or use a criminal property, okay, concealing or disguising or transferring criminal property or removing it from the country, entering into or becoming involved in an arrangement. Sometimes you might be a part of it, or sometimes you are the one who's initiating it. Whatever. Once you are caught there, you are also you also fall into that category. Okay. So entering into or becoming involved in an arrangement which is suspected to facilitate the acquisition of a criminal property by or on behalf of another person. Still, it's a money laundering offense. All these are offenses. Failure to report the knowledge or suspicion of money laundering. Sometimes you are not doing money laundering yourself, but you are there to report if you have any knowledge or if you suspect someone. But if you fail to report, again, it's a money laundering offense. Tipping off. What is tipping off? Tipping off means you are making someone aware that there is an investigation going on them. Making someone means what? The money launderers, the one who themselves have done this, they are involved in this money laundering process. You are making them aware. It's like you are telling the thief that you know what, you are being investigated by the police. So they become aware. If they become aware, it's very difficult for them for you to trace them. Once they're aware that they're being investigated, right? They're under suspicion. Then what? It's very easy for them to escape, right? So that is the meaning of tipping off. You don't say. If you know that you are suspecting someone of money laundering, you don't tell them. You quietly let the investigation go. So this is also, telling them is also a money laundering offense. It comes under offense. Now, failure to disclose knowledge or suspicion of money laundering may include these things. Okay. Failure by an individual in the regulated sector to inform whom Financial Intelligence Unit. Short form is FIU. You fail to inform them. Or MLRO, that is Money Laundering Reporting Officer. You have to report to these people, right? If you fail them to report, then it's an offense. Second, failure could be from the other person also. Failure could be from the part of the Money Laundering Reporting Officer himself, right? So they could fail to report it to whom? FIU, that is Financial Intelligence Unit. Third, if business fails to meet its obligation under the regulation, okay, what happens? Either you could be you will be given some civil penalties like fine and all, or criminal sanctions could be there on the business and the individual who are responsible for this. Okay, now you should know what a criminal property is. Okay, examples of criminal property that is arising from a criminal conduct are property that you have acquired through theft. It's not your own property. You stole the property. Second, proceeds of tax evasion. Tax evasion is not is illegal. Any proceed that you have through tax evasion is a criminal property. Bribery or corruption. Saved cost from a criminal failure to comply with regulatory environment. For example, you are not complying with the regulatory environment. You are not involving that cost. Because of that, you have saved cost. That is also a criminal property, which ultimately comes under money laundering offense only, all those things. Next, let's go through the following scenarios. Okay, so in the first one, okay, if you are an auditor of a company, let's say you have realized that your client has incorrectly reclaimed VAT on the purchase of a motor car. At this point, what do? You are proposed to make an adjustment to the financial statements. Okay. You point this out. In fact, you tell the client that you have to make an adjustment to the financial statements as well as to provide for the additional tax that is due. Okay. You are also telling your client, being an auditor, that they have to they have to declare this to whom? The tax authorities, the company. But what does the client do? They tell you no, they have already done an inspection. Inspection has been done by the tax authorities already, and tax authorities did not reveal any error. So that's why client says we don't have to do anything further, which is incorrect, right? You have to declare that additional tax is due, but you're saving your tax. You're not telling them, the tax authority. So you are lying here to the auditor. This is a criminal offense, money laundering offense. Second, because you are keeping the process of tax evasion. Second scenario, let us go through this. Okay, these are some examples only for you to understand it better, what we are talking about. Knowingly, a company receives invoice from the same person twice. Okay, a payment has been duplicated. So what did the director do? They told the account departments to ignore the negative balances when they issue the statement of accounts to customers, hoping that they fail to notice. Okay, so once you ignore the negative balances, customers are more likely to not notice it so much. But if you see that this error, right, of receiving invoice twice and then ignoring negative balances, this is not a criminal offense. Okay, if they are corrected, they may not constitute a criminal conduct. But however, in both these cases, if you can see that there is one common thing in this scenario and the previous scenario, what is it? There is an intention. Without an intention, you will not go for any thing like this. What is an intention? Your personal gain, right? Either through someone else's mistake you want to get that gain, or you are avoiding a legal liability. In this case, this is through another person's mistake. In that one, you're avoiding tax evasion. Legal liability you're avoiding. So through this, you are getting a benefit. Okay. So in both of these cases, the first one, tax evasion, and this one, both the cases accounting know, right, that things are not correct. Or at least they could suspect that the client is involved in money laundering in both the scenarios. Now, at minimum, okay, so now we are moving to anti-money laundering program. This is very important. At minimum, anti-money laundering program should incorporate these things at minimum. That means if it's at advanced level, it would include more things. But we should not go there. Knowing minimum is enough. Money laundering and terrorist financing risk assessment. Know the steps because we are going to go in detail in all these 4 steps. First, this has to be included in that anti-money laundering program. Second, internal control has to be there. To make sure that money laundering does not happen, make sure your internal control is strong. That means you implement system, the policy, the control to manage the risk. Third, you do customer due diligence. You do a due diligence of a customer. You do enhanced due diligence and you do simplified due diligence. And the fourth, you enhance your record keeping and data protection, protect your data. So if you follow these 4 things, you can combat your money laundering issue. Okay. Now we are going to go in detail in this 4. First one, money laundering and terrorist financing risk assessment. Short form is known as MLTF. What happens here? A written risk assessment must be carried out so that you identify and you assess the risk of money laundering. Here we are analyzing the risk, assessing the risk, and it has to be written. Okay. The risk assessment should take into account information provided by the supervisory body on risk factors in the sector. There are some supervisory authority who are supervising this risk factor. So risk assessment must take that into account, right? The following risk factors must also be taken into account. There are some risk when you are auditing a company or being an accountant. That has to be taken into account. One is the firm's customer. Some customers are very risky, right? We'll see later. What should we do about it? Second, the country. Maybe the risk could come from the country or the geographical area where that firm operates. Maybe the product and services are very complex, the firm's transaction, the firm's delivery channels. So these are the following risk factor. You have to take this into account. Then risk assessment should be used to. Using this risk assessment, you are going to develop policies on how to mitigate that risk of money laundering. Then you apply a risk-based approach to detect and prevent money laundering. The risk-based approach recognizes that the risk posed will not be same in every case. See, the risk-based approach says not all the risk under MLTF will be same. So when you have to tailor your response, the business, right? When they have to respond it in proportion to its perception of risk. The risk-based approach requires evidence-based decision making to better target risk. See, when you are taking the risk-based approach, you have to go by the evidence. Because if you go by evidence, you can take better target your risk and make better decisions. Now, second way to reduce money laundering issue is internal control. Have strong internal control in the company. There are three ways. One is officer who are responsible for compliance. So that is also part of internal control only, right? People should be there internally to control. One is officer. Keep officer who are responsible for compliance. Okay. So the firm must appoint MLCP. What is it? Money laundering compliance principle. Firm must appoint. And this person must be on the board of directors or a member of a senior management. Okay. But if there is only one practitioner, there are no employees, this could be exempt. Okay. No need to go through money laundering compliance principle. Okay, if you don't have any employees, if you're just sole practitioner who's working in the firm, you don't have to appoint an MLCA CP. It is exempted. Then second is firm must also appoint a nominated officer such as MLRO so that they can receive some internal suspicious activity reports to them. Okay, and then they assess whether this suspicious activity should be reported to the appropriate regulatory body or not. First, internally, you have to solve this issue. After that, we'll decide whether we have to externally report it to the regulatory body or not. Okay, sometimes this MLRO and MLCP may be the same person. Okay, if the MLRO is sufficiently senior, sometimes possible. Next, we have employees. So first one was officer responsible for reporting. Now employees. Employees is also comes under part of internal control. Okay. Make sure your employees have relevant skills, knowledge, and also their integrity also. That means they're honest. Okay, integrity of employees involved in the identification, prevention, or detection of money laundering. This should happen both before as well as during the course of the appointment. When before you have appointed them, you have to make sure employees that you're hiring in the company, they're integral. They have the skills, they have the knowledge. Knowledge of what? Knowledge to identify, knowledge to prevent, knowledge to detect money laundering. See, if someone does not know the rules or techniques to know the money laundering, to prevent money laundering happening, that employee is of no use. Then you will not have a strong internal control. To have strong internal control, your employees have to be should know how to identify, prevent, and detect money laundering. Not only before the appointment, before taking on the employee, after also. Staff training, give staff training. And this should be done on an ongoing basis. So that if any complex transaction happens, how they can handle it. They need to be given training for that. Because sometimes those activities may be related to money laundering. Third aspect of internal control is your internal audit function. They also can help. Okay. So internal audits function is what? To assess the adequacy and the effectiveness of the firm's anti-money laundering control. Basically, you see how effective this anti-money laundering controls are. Okay. Again here, if you are the sole practitioner, no need for this independent audit function. We are moving on to a third way of anti-money laundering program, That is customer due diligence. You do a due diligence on all your customer so that you are safe from any money laundering. And how do you do that? This is usually done for your new clients. Okay. So accountants, okay, before they take any new client, they have to make sure that they do a due diligence on them. They have to get some satisfactory evidences from the client, so that they can see what is the identity of the client, right? Business must apply this procedure at the start of a new business relationship. 3 times they can do this. One, customer due diligence when they're first starting a relationship with a new customer, because they do not know about the customer whether they are true or not what they are claiming. So you have to make sure that they have some identity, something is there. Second is at appropriate points during the lifetime of the relation. Sometimes you have a long-term relationship with the client, but still at some point you have to do a due diligence. Or third reason is when an occasional transaction is to be undertaken. Some transactions are occasional. There you need to do this due diligence. What is an occasional transaction? Occasional transaction means that which occurs outside a business relationship. Okay. And if it has a value of more than 10,000 euros, it is okay. And for a high value dealer, you definitely have to do a customer due diligence. Okay. But amount and all this 10,000 euros for high value dealer, all those things you don't have to know. This is just an example. Then customer due diligence must be performed as soon as it is reasonably practical after the contract is first made. When a contract is first made, you came to know that this is your client. That time itself, we have to do the customer due diligence. Okay, where you get the identity of the customer. Okay, but if you cannot get this in your first time the contract is made between two parties, you cannot continue with the relationship any further. You should stop it there itself. Whether it is an occasional transaction or a business relationship, you should not go ahead if you do not get any satisfactory evidence of your client, of the identity of your client. Now, so you identify the client. In a customer due diligence, first you identify the client, know who the client is, and then you verify the identity. Either you can get some documents, okay, or you can get information from any independent or reliable sources. Second, you identify the beneficial owner. Okay, who is the owner of this customer, so that you know the control structure. Okay, but reasonable measures should be taken to verify the identity on risk sensitive basis. It's very risky to get the identity. It's a risk sensitive basis. Based on this, you have to take some reasonable measures when you're doing a due diligence on your customer. Third, gathering information on the intended purpose and nature of the business relationship. What is the purpose of both of your relationship? You and your client. You have to get the information on that, and also the nature of the business relationship among you and your customer. The business must be able to answer the following questions. Okay. After you do due diligence, any business, they should know who is the client. They should know. Second, who owns or controls them. What do they do? What do they do with the client? All these are from the point of client. Okay. What is their source of fund? Can you describe the activities? What will you be doing for them? And what is its legal structure? Next, basic identification. So this is how you go through identification procedure to identify. Okay, if it's an individual, you make sure that their full name and address is given. Full name of the client and the permanent address of the client. Example, driving license, your passport, and recent utility bill to confirm the address. If it's for a business, you verify the company's name, company's registration office, or the company's number address. Like certificate of incorporation, list of registered numbers and directors, certificate of registered address. If it's for a trust, the inspection of evidence to establish and confirm what is the nature and the purpose of the trust, what is the original source of funding, and what are the identities of the trustees, controllers, and beneficiaries. This is important for the trust. Now, We are moving on to the second type of diligence from customer diligence, that is known as enhanced due diligence. The meaning enhanced says it is something for a high value something. So this is for the higher risk client. Okay, not for any client. Higher risk client only goes through enhanced due diligence, like more advanced due diligence will be there. What do you do here? You should go through their background and the purpose of the transaction. Okay, and you will increase the monitoring of the business relationship with this type of client, the high risk client. The third one is known as simplified due diligence. The meaning itself tells you that this is for the lower risk, where clients are giving lower risk of money laundering. Then you can just do simple due diligence. Okay. It would be helpful for the auditor to explain to the client the reason for requiring evidence. See, when you are taking this evidences of identity from the client, auditor have to make the client understand why they are taking this information. Otherwise, customers might perceive something else and you might lose that customer. So, or the client. So you have to make sure that you give them the correct reason why you require evidence of the identity. This can be even given in the engagement letter itself, right? That you will be requiring the evidence of the identity. Now, the fourth step, that is enhanced record keeping. You enhance your record keeping. Why do you do that? Because if you have the record, accountants can show that they have complied with any money laundering regulations, and they can even protect themselves also against any investigation. Records must be kept of. Okay, what records you need? All customer due diligence completed. You need their copies also. Copies of the evidences. Transactions with each client. You need to keep a record. Internal and external money laundering suspicion activity reports you must keep. And what is the time period for this record? At least 5 years. 5 years after the relationship with that client has ended or the day the transaction is completed. Out of this two, you can take 5 years from there onwards. At least for 5 years you have to keep the records. Reporting procedure. Okay. As we know that not to report itself is a criminal offense about money laundering. So money laundering regulations require that a person in the organization is nominated to receive disclosure. See, money laundering regulators say keep a person in the organization who is nominated to receive this disclosure. They could be simply MLRO, the money laundering regulation officer, or anyone in the organization you can keep. Okay, to whom information comes in the context of relevant business. So which for as a result for which is suspects that a person is engaged in money laundering. Okay, they must disclose this to the MLRO. Third, where a disclosure is made to MLRO, okay, they must consider it in the light of any relevant information which is available to the organization and determine whether it gives rise to suspicion. So they must see whether they have any relevant information to say that it is giving rise to some type of kind of suspicion for the client. Where the MLRO does so, determine the information must be disclosed as a regulatory body. Okay, sorry, the information must be disclosed to a regulatory body authorized for the purpose of these regulations. One is FIU, that is Financial Intelligence Unit. And in UK, it is the NCA, National Crime Agency. You have to disclose to them that you have complied. The MLRO completes a standard form that identifies. So this is a standard form. Okay, here they identify the suspect's name, their address, their date of birth and nationality. Second, any identification or references that are seen, or the nature of the activities that is giving rise to suspicion. Any other information that may be relevant. Okay. Monitoring. How do you monitor? So the MLRO and appropriate senior management should together monitor the effectiveness. Both MLRO and any senior manager, both of them should monitor how effective the policies or the process are. Okay. so that any improvements can be made when inefficiencies are found. Because you need to monitor also. So senior management should encourage several employees to provide feedback on the policies. Senior management can tell employees, look, if there is any issue, okay, let us know, give us the feedback on the policies that are already in the place to overcome money laundering. Third, if there are any changes to the policies, you have to communicate this to the employees. And wherever training is needed, you have to train. The effectiveness of the system, MLTF, they must be independently reviewed. Okay, independent does not mean external, but it could be performed by an internal audit also, or a compliance department, or an internal quality function. Okay. Senior management, okay, how do you monitor? Senior management who are responsible for compliance and the MLRO, they should monitor the publicly available information on best practice when they are dealing with MLTF risk. For example, by reading thematic reviews by regulators to improve understanding of good and poor practice. Potentially suspicious transaction. Now there are some transactions which give rise to suspicious. Okay, we'll go through this. There's something, okay, suspicious transaction means those transactions which are not so much in line with their client's known or usual legitimate activities. There's something beyond this activities only. Examples like unusually large cash deposits, frequent exchanges of cash in other currencies, overseas business arrangements with no clear business purpose. So this three will give rise to suspicious transactions. Now, the third is the need for ethical guidance. Okay, so ACCA provides guidance regarding the area of money laundering. Okay, why have they done it? Because there is a conflict between two things. One, accountant professional duty. Okay, as an ACCA member, you have a duty, professional duty, that you have to be confidential. You have to add with confidentiality. Second is, again you have a duty. Okay, so the duty to report, you have a duty to report suspicious or money laundering to the appropriate authorities. This is required by the law. The first one was required by a professional body, ACCA. All ACCA member needs to keep confidentiality intact. Second, according to the law, if any money laundering happens, suspicious activity, you need to report that also. So if you report that, you are going to go against confidentiality. If you are being confidential, you cannot report about money laundering. So there's a clear conflict. That's why ethical guidance is given on area of money laundering. Let's see what it says. Professional accountants are not in breach of their professional duty of confidentiality. Please understand this. Even if you have disclosed certain information which gives rise to money laundering, or you are suspicious that money laundering is taking place, that is not the same as breaching the professional duty of confidentiality. You're not breaching confidentiality because you are reporting it in a good faith. Okay. If a disclosure is made in a bad faith, or you are disclosing but you do not have any reasonable ground, then you are breaching the confidentiality. In that condition, you would be sued. Accountant could be sued for that. Okay. Now we are going to go through Financial Action Task Force. Okay. These are some international effort to combat money laundering. Okay. So this is an international body. Okay. Globally, it promotes how to overcome money laundering. Okay. It gives some recommendations also. How? Let's see what the recommendations include. International cooperation, including extradition of suspect. Internally cooperate. Second, implement relevant international conventions on money laundering. Whatever there is, any international conventions are there on money laundering, implement it. Second, if money laundering happens, it should not be taken as a norm, or it should not be accepted. You should criminalize it. And you should even make the authorities aware of it, so that they can confiscate any proceed of money laundering. They will take it. Implement customer due diligence. Record keeping. Okay. Or suspicious transaction reporting requirements for financial institution and designated non-financial business and profession. Then we have some more recommendations. Establish a financial international unit so that they can receive suspicious transaction report. They focus on three principal area. FATF. What is FATF? Financial Action Task Force. Why are they set up? Because of three principal reasons. Number one, they are setting standard on how to overcome money laundering. Second, they evaluate the degree to which countries have implemented this to combat money laundering. And the third reason is they identify and you need to identify and study money laundering, because without knowing what money laundering what are the examples of money laundering, that this also constitutes of money laundering, this is also part of money laundering, you will not understand. You will sometimes think certain action is not part of money laundering, you might let it go, but actually it's a money laundering. So without studying, without identifying that a certain thing is money laundering, you will not be able to tackle it. Understood? So that's it. Now we are going to do a test your understanding before I summarize everything. Test your understanding 1. Okay, and this question is for 5 marks. Let us first start with the requirement before we read the case study. You should always start with the requirement, because when you're reading the case study, then you will know what you are looking for. So you need to evaluate the implications for the completion of the audit. Remember, recommending any further actions which should be taken by your audit firm. Okay, this is regarding the completion of the audit. And there are two requirements, if you can see. First one is you need to evaluate. Okay, what could be the implications, the problems that could occur when you are going to complete the audit. Second is you need to recommend. Okay, why am I telling that you need to emphasize on these two requirements separately? Because what happens is most of the students, they work on the implications but they forget about the recommendations, or they work on the recommendations and forget about the implications. No, to get this 5 marks you need to write both. Okay, now this para, if you see, if you have gone through your past papers, just obviously you will not understand anything right now, but you will just go through the past paper to see the pattern. You will see that this few lines are just the introduction. They're always repeated in the case study. Okay, like what's your role, what are you supposed to do, which company you are auditing, what is the issue with the company, things like that. Okay, this is generally they will short para is given in the beginning. Okay, and by the way, this question that I'm doing right now, test understanding, because this is not your latest textbook, so you will see that even in your test understanding, there'll be no 20 marks professional marks attached to it. This is without the professional marks I'm doing it, but it's okay. It will not have a big impact when you are going to solve questions with the 20 marks professional skill marks. Okay, it's not going to have a big impact, because by the time we start doing revision kit, we'll be getting the latest textbook and the revision kit, so we can do the questions with the 20 professional marks. Okay, because anyway this audit I'm doing it for the December session, so we have a long time to go ahead. Okay, and revision kit questions I'll be starting after the September exam gets over for the audit, so you don't need to worry about it at all. Okay, we can just do the questions. Now you are a manager responsible for the audit of this company. Okay, this always they will give you that you are a manager, you are an auditor, this or that, and they will tell you the name of the company, this company, and they will tell you which company it is into. A chain of health and leisure clubs owned and managed by the entrepreneur. Always make sure that you know the person. Okay, they will give you several names. For example, this is a financial manager, he's the auditor, he's the audit committee member, he's the entrepreneur, things like that. They will always give you. You have to remember who is who, because sometimes it's easy to get confused. They might give you so many names, but in this case, it's just one name, Izumi Smith. And the audit for 31st March 2005 is nearing completion, and the draft financial statements recognize total assets of 27 million, profit before tax of 2.2 million. The audit senior has left the following file note for your consideration during your review of the audit working paper. Okay, now you need to review this thing before completing the audit, and it is just one, that is cash transfer. Okay, but in your actual exam they will give you many. They will give you many because it's a 50 marks question, the first one. So cash transfer, this is regarding Cash transfer. During a review of the cash book, a receipt of 350,000 was identified, which was accompanied by the description of SJ. Bank statement showed that the following day a nearly identical amount. Okay, so bank statement showed that the next day a nearly identical amount was transferred into a bank account held in a foreign country. Okay, so when I asked the financial controller, I was told to speak to Zomi, who's the entrepreneur, as she has the sole responsibility for the cash management. According to Zomi, an old friend of hers, okay, Zomi's old friend gave her a loan, and that loan only uh, she used to expand the company. Okay, and documentary evidence concerning the transaction has been requested. The auditor also told give us some document so that there's an evidence that this transaction has taken place. But Izumi has not provided it to the auditor. There are so many issues. First of all, cash transfer to the foreign bank. Second, documentary evidence was not there. Third, if you see the sole responsibility, no clear division of responsibility. Three issues already you have identified. Okay. You have to give recommendations also. So out of this 5 marks, you can divide. Let's say you can give 3 implications, 2 recommendations, or 2 implications, 3 recommendations. Okay, now you need to know how to write answers, because this is your first AAA answer that we are doing question, as in from your textbook. So you need to know that when you're writing audit answers, whatever answer it is in ACCA, you need to write it in paragraphs. You cannot write everything in an essay format. Okay, the title is cash transfer with subheading. If you can see, there are many paragraphs, 1, 2, 2, then we have 3, 4, 5, 6. Okay, the answer is generally lengthy, then you can write. Okay, you are not supposed to write this much. Okay, when you're writing answers also, please don't read answers behind. Always try to attempt, do it on your own, whatever you know. See, you have to keep this in mind that initially, even later also, okay, there is no stage called perfection. You will never reach that perfection stage. You will never be able to write what they have read, not even 50% of it. But the thing is, you need to write whatever you know, because until you don't write, you don't know where you stand out, how much knowledge you have, how much you need to acquire. Are you good in certain area, are you weak in certain area? You will not know it. You need to make the habit of thinking. You need to give that time. Okay, so write answers in the time, and it's for 5 marks. So limit yourself that you're going to give 5 points. That's how you decide whether you are going to write that 5 in 2 lines per paragraph, or 3 lines per paragraph, or 5 lines. Is up to you. Okay, but the main point I'm going to extract. I'm not going to read word by word. Okay, that you can do it on your own. Textbook is there, answer is there. What I'm going to do is I'm going to extract the points from it, and you are going to build up on that answer. Okay, so how do you start this answer? Without reading, if I tell you, how do you start? What is the main thing? See, there's a main theme in everything. It came from somewhere. Cash transfer. Main area is it is targeting is, you should understand that it is targeting money laundering. This is the topic. You need to identify this. This is very important in your exam also. If you are able to identify from where it came, what is that main theme they're talking about, which syllabus of the syllabus, section of the syllabus, then answering becomes very easy, because you have already studied. You know the knowledge part of money laundering. This activity indicates money laundering. This are the things which you need to do if money laundering happens. This is the person you need to report. We went through all this, but they didn't write money laundering. They told cash transfer. It is transferred to foreign bank account. They are not giving any evidence. Separation of duty is not there. So already you got your issues there. That's it. You need to write these issues now in different paragraphs. Okay, so you can start. Okay, so this is how they have started. Okay, you might start in another way. You might start talking about money laundering first, but I would say that rather than straightly going to money laundering, okay, rather than saying money laundering is this, okay, they have defined money laundering. You need to define money laundering, because you're talking about money laundering. But before definition, how did we come there? Because nothing has been mentioned about money laundering in the case study. They told about cash transfer. So you need to start from there. that this is a money laundering. Then you define money laundering. Okay, so this unusual, unexplained cash transfer in a foreign bank account leads to money laundering. Okay, that means Izumi is using the company to carry out money laundering. That's why in the next line they started defining money laundering. Because you first need to identify that link, how cash transfer turned into money laundering. Because it is unusual. Number one, you need to write these terms. It's very important when you're talking about cash transfer and money laundering. Not all cash transfers are money laundering, please, because this is a very unusual and unexplained also. It's not even explained also. Document evidence was not given. Okay, unusual also. It's not in the normally it happens, because next day if you see same identical amount 350,000 has been transferred to a foreign bank account. So it's unusual. Number two, number one, number two, unexplained. So use these terms. I will highlight it for you. Unusual, unexplained cash transfer into foreign bank account. That's why it lead to money laundering. So then you start defining money laundering. This is your technique. This is your knowledge part that you have gathered. What is money laundering? Okay, this you can write it in any way. Need not be what they have written. Okay, concealing the origin of the proceed, right? All those things. So that's the first. Now let us go to the second para. Okay, all the till here it is the definition only. You can read it on your own later on. Second, okay, remember there are three stages of money laundering: placement, layering, and what is it? Out of those three stages, you need to identify what is this stage. Integration. Placement, layering, integration. Okay, so this is layering. This transaction that is called layering. How? See, first, okay, they are placing this in the bank account. Whose bank account? Please mention the name of the company. Very important again. Company's name needs to be mentioned in your answer. This is the rule of the ACCA. Because that shows you are linking this to the case study rather than writing pure knowledge from your textbook. No. So you are placing that proceed in the bank account. Okay. After that, you are transferring that fund to the foreign account. So basically, you are placing it in the bank account to transfer it in the foreign account. Okay. Rather than directly transferring it to the foreign account. Why you might do this? So that it appears more legitimate. Okay. And you make it very difficult for you to trace. Difficult to trace the original source. Because original is a money laundering, no? You don't want them to trace. So you are giving a layering, layer over layer. You're trying to hide it by layering it. Okay. Next. Third. Now your implication starts. Okay. Again, read the requirement. You can read the requirement several times. It's very, very, very likely that you might forget what the requirement is all about. Always keep reading, reread, evaluate the implications for the completion of audit. So now, see, before the implication, you should know, right? What this cash transfer. First, I set the tone. You have already told is a money laundering because it is unusual and unexplained in the first para. Second para, you told layering. Correct? Now you come to the implication. So because it's a now money laundering, what would be the implication? Starts from third, fourth, and fifth para. Okay, third para. You can write it in any order. Already three issues you have solved. Number one is weak control over cash. Why? Because Izumi is the one who is having the sole control. There is no separation of duty. There is no segregation of duty. You see, he's the one who is so because he is the one, no segregation of duty means control over cash is weak. Okay, so because of this, because he's the owner also and he's already having control over cash means what? There could be an intention that Izumi could facilitate illegal activities. Very likely. You see, you should always link your implications with money, how it is facilitating money laundering. How weak control over cash will facilitate money laundering. That's what you are trying to show, right? Now let us go to the second implication. So first implication is over. Second is documentary evidence. When they asked, auditors asked, give us the documentary evidence, Izumi didn't give. Okay, but it does not mean that Izumi is at fault. So it could be possible. See, always give possibilities in your answers. Okay, don't always try to prove that Izumi is at fault or Izumi knows everything or Izumi is the one who's doing this money laundering. Maybe it could be money laundering could be done without Izumi's knowledge, right? It is possible that company is being used as a vehicle for money laundering without Izumi's knowledge. Okay, maybe. See, why are you giving both pros and cons? Because the requirements start with, this is very important again. Okay, evaluate. Evaluate means both pros and cons you have to give. What are the chances Izumi could? What are the chances Izumi might not be involved in? Both the side you have to give. Evaluate means both the side, not just one-sided answer. So your requirement, the verb that they are using is very, 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 very important in your answers also. This is how you show that you are evaluating by showing Izumi's position, right? So this money could be accepted in a good faith also. Okay, but without the source of the funding, maybe you didn't adequately verify the source, but it could be accepted in a good faith also. Possible, right? Because you're evaluating. Now, let us go to the third implication. What is it? Materiality. Materiality. Whenever money laundering comes into issue, especially in cash and all, talk about materiality in your answer. And it's very easy to talk about material. How do you know when to talk about materiality? Because you have been given figures in your answer. Whenever figures are given, that means you have to talk about materiality. This is a hint. You see, every time they will not tell you, or in the word they might not say anything about materiality. But how do you know? Because you have been given profit before tax, you have been given total assets, also you have been given the cash receipt of 350,000. Through this, isn't it possible for you to calculate materiality? Whether it's material or not? Yes, it is. Whenever figures are given to you, you have to make use of the figure. There is a reason why that figures are given to you. Otherwise, they could just say huge amount of cash transfer or cash has been transferred, or they will write cash transfer is material. But here they didn't say anything. You need to find out that materiality using the figure. Directly, you don't have to put the figure. Total asset is this much, profit. No. You have to find out the materiality and indirectly you are using the figure. So, you need to find out whether this cash transfer is material or not. How do you do that? It is very simple. Whatever your cash transfer is, 350,000, divide by what is your total assets? Because cash comes from your total assets. It's a part of our assets, right? 27 million. So 27, 1, 2, 3, 1, 2, 3. 6 zeros. Okay. It will be 1.29 something. But round up to one decimal place. 1.3%. So this cash transfer accounts up to 1.3% of the total asset. Now you tell me, is it material or not? Okay. So this 1.3% of the total asset is material to the financial statement. You see, because you are showing the implications to the completion of the audit, you have to know whether it's material or not. So this transfer is material. Okay. So because it's material, explain. When you're explaining one point, see 1 point, 1 paragraph. When you're explaining 1 point, now it's a 5 lines, it could be 6 lines, it could be 2 lines also. It's up to you how much you can explain that point. But 1.1 paragraph only. So this whole paragraph will be talking about materiality only. If it's material, what are the implications? So implication could be, now whatever the matter or engagement relating to cash transactions should now be considered as a high risk, isn't it? Because it's material. So you have to talk about high risk. Okay, I will highlight. This word needs to be there in your answer. Material, cash transactions are high risk. So that means what should you do? See, you are giving recommendations also. Inside that itself, we are giving, high degree of professional skepticism needs to be practiced. You need to question more. Whenever an area is high risky, you question there more. Okay, now the audit file should now be subject to an independent second partner review. Don't count like this, okay? Exactly 3 points only I will write or 2 recommendations, not like that. With every implication, give recommendation. Okay. So because this is high risky, what should you do? Independent second partner review you can go for. The audit file needs to be subject to that now. Also, they might seek legal advice also because this is regarding money laundering, no? So it's better to go for legal advice also. What are the legal implications of dealing with this client? Because you know this client is involved in money laundering. So if you deal with this client, what could be the legal implications? You need to get some legal advice on that. Most of the time, if you see, maybe in your case study, a similar things will be given, but maybe figures are different. The name of the company is different. If you ever come across these things, you can write the similar points like this: audit file, second partner review needs to be done, legal advice needs to be sought, right? Similar points you can write. But if it's the other way around, risk is low, it's not material, then you should say it's a low risk. Okay, there you will not say, okay, second partner review is needed, legal advice is needed. No. Okay, now we are talking about the from the financial statements point of view. Financial statements, okay, implications on the financial statements. See, we know cash will be debit side. What about the credit side? Audit, you have to see whether credit side has been recognized or not. Maybe in the credit side they have recognized it as a revenue or contract entry against the cash payment which was made the next day. Right? Now, 7 and 8, mostly we're talking in terms of money laundering. In this money laundering situation, what should you do? All the things, anti-money laundering things, reporting to this person, reporting to that person, those things you need to write at the end. So this situation needs to be reported to whom? MLRO, Money Laundering Reporting Officer, as soon as possible. Okay, they make the decision. MLRO makes the decision whether further inquiries are required or not, and if reports needs to be made to the appropriate authorities or not. And now finally, okay, one point, tipping off. This should be taken care of. What is the tipping off? Tipping off means you are making your client aware that their activity is suspicious. You are doubting them that they involve in money laundering, which you should not do. Your client should not be aware. You should never make the client aware that they are being suspected. Okay, because if you tell them, this is also considered as a criminal offense. Okay, so when you're discussing this matter with the Zomi, who's the owner, make sure he's not alert to the suspicion of that he is not suspicion of money laundering. He should not know that he also is being inquired or being suspected. Okay, so that's it. Now let us summarize everything we have discussed so far. So we have started with money laundering, okay, and then we went through the FATF, that is the Financial Action Task Force on Money Laundering. Okay, what are we supposed to do? So these are few things which we have covered. We started with legislation, Proceed of Crime Act 2002 and Money Laundering Regulation 2017. These are the two legislation. Okay, you might not have to go in detail, but at least you should know that if money laundering situation happens, what are the penalties that you have to do, what are the implications, right? And what are considered as crimes and what are not considered as crime under money laundering. Offenses, money laundering, tipping off, where you're telling the client that they have been suspicious, not setting up procedure. You're not even setting up procedure to find out, know about, identify money laundering situation. That's an offense. Not complying with procedure, again an offense. Ethical guidance was given that how you conflict with confidentiality. There should be a conflict. For example, your ACCA code of ethics says confidentiality as a principle. You should not give confidential information about your client to anyone else. Otherwise, you are breaching. But money laundering says no. If money laundering situation happens, you need to report for the benefit of the public. Then you are not breaching the rules, right? That's why there's a conflict and you need to maintain it. Duties. You need to do a risk assessment. Some activities are more risky. For example, we have just saw in test understanding cash transfer. Then system policies controls. You should have internal control. Educate your employees. Work with the person who monitors such activity. Customer due diligence. You should know your identity of your customer. Right? Keep their passport, their identity card, their address. Enhance record keeping. At least record should be kept for 5 years. And if it's a high risk, okay, record, there should be an enhanced due diligence. And if it's not so much, risk is less, then simplified due diligence is enough. So that's it for lecture 2, money laundering. And make sure that you go through all the rules and regulations and what are the implications of it. So see you in the next lecture. And don't forget to subscribe to my channel. Till then, take care.